A quick look at what that market picture really looks like out in Asia. As I said, though, most of the markets still in close, while you do see the likes then of the Nikkei sitting down 2.84%. But the Hang Seng is more critical there, managing to rise by close of trade, quite significant. Headed off into the European market then, a whole lot of green right now. Those markets jumping as shares in energy firm, the likes of Total, and a slew of other positive earnings reports added to optimism over easing of lockdowns by major economies. Then Total SA managed to gain almost 6% after it maintained its dividend despite reporting a sharp fall in first quarter net adjusted profit due to a plunge in those oil prices. So Europe's oil and gas sector also got a boost from surging crude prices and expectations that fuel demand will begin to recover as some US states as well as countries in Europe and Asia started to ease those lockdowns. All eyes, though, will turn to German Constitutional Court ruling on the legality of the ECB's bond purchases later in the day. Most analysts do not expect the court to rule against German bond purchases, but investors are on high alert for anything that could alter the ECB's massive stimulus scheme, of course, unlimited in that respect. So for now, most of that market out in Europe sitting quite positively there. The FTSE 100, the DAX 40 and the CAC, the DAX rather, and the CAC 40 out in Europe, all doing relatively well. Quick look then at your commodities, taking a look at your bottom left-hand screen there as well. $29.39 a barrel for Brent crude. It is up 7.8%. A whole lot of that may indeed be based on some investors presuming that things may indeed change when it comes to demand. Whether that will be true, we'll hopefully see in time. That gold price sitting at $1,696 a fine ounce. In your local currency, well, it's much better, more than 1% better off if you take a look at the top right-hand corner here. 18 Rand 34 for a US dollar. A slight improvement as well when it comes to the euro, which sits below 20 Rand against the US dollar. 22.86 then for a British pound. The oil share slightly up this afternoon. It's around 1/3% to the good overall there. All right. Let's chat to Chantel Marks now, Head of Equity Research at FNB Wealth and Investment, and she joins us via Skype. Chantel, it has been a market flow then that one would think can give you a continued state of negativity, but we seem to be finding some positivity from somewhere. Where is it coming from?
Well, I mean, usually when markets have been down for quite a while, you tend to get to a situation where guys will look at any sort of news in terms of taking that as good news. So, for example, we heard yesterday that California's economy is planning on opening up, and we've got some economies opening up in Europe, and then we've got positive news. And the market kind of runs on this because there's this absolute positive news. So anything that it can hold on to.
Yeah, I suppose the significant element here becomes then, if you're looking for any form of good news, you certainly won't find it, in some of our equity stocks, the likes of Phumelela, areas where you perhaps don't always look, but you get the likes of Phumelela who may be going into liquidation, seeking around 300 billion there to try and stave off a complete collapse. How big a deal is this for South Africa's gaming and leisure and tourism?
Well, it's an absolute huge deal. So I think that if you saw the general tone out of Famous Brands update yesterday as well, and this is a company that is actually doing well operationally in South Africa, you can tell that it's very tough going. Restaurants are closed for takeaways. No one is gambling at the moment. And for Phumelela specifically, they had some very serious issues before going into COVID-19. They had a dispute with the Gauteng Gambling Board around bet tax, which was a big part of its revenue or its income. And without that, they were already loss-making, even prior to COVID-19, where they had to basically halt horse racing activity, which is also a massive form of revenue for it, through TV rights and betting rights, both locally and internationally. So this is just the first of what will probably be quite a few casualties in this space, maybe not in the listed space specifically, but definitely when you look across the private sector.
Yeah, and that private sector then also gets the likes of Dis-Chem who get hurt by the Competition Commission as well, then on one end. But then you also get the likes of Anglo American who then say, look, things weren't great for a while, but we're able to get one of our converter plants back online, and operations on a mining perspective are able to get back on track as well, we're going to be okay.
Yeah, I mean, Anglo American Platinum were actually quite lucky that they were able to continue with construction and repairs on that concentrator plant. I think it was a couple of months ago, or towards the beginning of the year, where they had to declare a force majeure as they couldn't actually accept metals from other mines to refine in order to sell and export. So they had a huge problem there, and they really needed construction to continue. It did, and they managed to deliver on that concentrator plant on time, which I think is quite meaningful for this company. And it means that the estimates that people made or analysts made in terms of how long they won't be able to refine platinum for would have been more or less accurate.
Yeah. Does the situation perhaps get any better as a whole for the mining industry? Yes, fine. Some, particularly Implats, for example, did share that they're going to be a cut in terms of production. But 14% isn't so bad in the context of, where we sit for other sectors, surely.
Yeah, I think the problem with the mining sector is going to be twofold. So firstly, you do have outright production cuts, which should result in some sort of pressure on the top line. Another factor will be that a lot of the metals and minerals that are being mined are to produce consumer goods with. So the fact that people are losing their jobs, that unemployment is rising, and the economy has stalled will probably result in demand for consumer goods coming under pressure. So you do have a bit of a supply side impact whereby the mines will produce less, which will take a little bit out of the system. So that could help the price a little bit. And then, of course, weak producer currencies will also help these mines. But I think the net effect is going to be quite a bit of a fall in demand, and it's going to be more secondary impact than a direct impact.
Yeah. Okay. So how much of a bother or how much of a worry should we actually maintain in this market when you have China and the United States still fighting over the origins of a virus that is, pretty much hurting the entire world? Is this the kind of fight we should even be having right now?
Yeah, I mean, we probably shouldn't be having this fight right now. The fight should be around how do we take on a united approach in terms of tackling this thing and eradicating it off the face of the planet, or at least limiting its spread until we have the methods to do so. He started it, she started it type scenario between the US and China really isn't helpful at this stage. And it just adds to uncertainty and volatility, both in financial markets and just generally from a news flow perspective. The problem is that something like this could escalate into a second round of trade war talks. And that, of course, will be very bad for global supply chains, and it will be very bad for pricing at a time where consumers really honestly don't need additional pressure on their disposable income.
Look, we certainly do not. You're 100% right there, but it does seem that we haven't even sorted out the first trade war technically, and now we might sit with just another one in a sense. Chantal, appreciate it. Thank you so much for the time. Always great chatting to you. Chantal Marx, there's Head of Equity Research at FNB Wealth and Investment, joining us here on the SABC. We'll talk then just about South Africa's manufacturing as well as we come up after this short break. How much impact has that had on vehicle prices? Let's find out right after the short break. Plummeted to an almost standstill as the coronavirus puts the brakes on deliveries and any major purchases. Let's take a look at those numbers. In April, new vehicle sales, unfortunately, sold in the country 574. That's a big plunge of 98.4%. Let's get that right. 574 vehicles were sold in the month of April, wiping out almost 100% really of those that were sold the month before. If we take a look by comparison then, the National Association of Automobile Manufacturers of South Africa, that's NAMSA, then managed to record though 33,500 new vehicles that were sold in March. That already was a big 30% fall compared to the same month a year ago. So already this was a big drop in the number of vehicles sold. And then we only got to sell 574 just last month. So it does tell you the story. The woes of the national airline, SAA, did manage to contribute to these poor vehicle sales numbers, unfortunately, because vehicles just could not be transported across the country. And even in exports, that was a big dip then. The automotive industry does contribute just around 7% to South Africa's GDP. It is the largest of South Africa's manufacturing sectors or industry locally. It does make up a big portion of it. Vehicle makers overall then do employ over 110,000 people in this country. To be specific, it's 112,250 people. The sector also does support more than 457,000 jobs, which have all been hit by this pandemic overall then. New vehicles that were sold in the month of April last year is 36,787. So the number has fallen from 36,787 to 574. So that shows you the 98.4% decimation, and manufacturing, as I said, at a near standstill. In 2018, total revenue amounted to around 500 billion rand for the sector. So how big a deal is this? I mean, it's an absolute decimation of the sector. Michael Mabasa is the CEO then of NAMSA, the National Association of Automobile Manufacturers, and he joins us via Skype. Michael, it was an absolute capitulation, a really, really horrible sentiment there, but perhaps one that is more theoretical than anything else and to be expected considering that manufacturing had stopped.
Well, absolutely, Rabila. I think the numbers are definitely not a surprise. We expected this huge drop, particularly for the month of April, because vehicles obviously were not manufactured. Vehicles were not sold at all our dealerships. Vehicles were not exported out of the country. No vehicles were imported into the country. So obviously in support of government measures to try and contain the spread of COVID-19, we were obviously on a hard lockdown for the past 35 days. The numbers speak for themselves. And I think that is a clear reflection of the economy broadly. And I think, when the Stats SA also, released their numbers, whether quarterly numbers and so on, I think we are certainly going to be seeing a similar trend emerging also from many of the sectors of the economy.
Yeah. The big question then becomes, I suppose, the sustainability here and the fact that, the industry may hemorrhage quite a few jobs. 110,000 people employed directly by the sector just on the manufacturing side alone. That number could come down quite massively, wouldn't it?
Well, look, I think the industry is very, very resilient, particularly the auto manufacturing side of the sector is extremely resilient. I can be able to say without any hesitation that we were very, very happy that all the manufacturing companies that we have in the country, because remember, South Africa is hosting 7 major international companies who are manufacturing vehicles in this country, the largest, in fact, in the African continent. All of them consistently have maintained that they will not be retrenching any employees, particularly in the medium to short term, so that we can be able to make sure that we are able to secure the jobs of people, particularly during this particular time. We are very pleased, obviously, that the industry is now back online under level 4, as it was announced. So many of our companies are now preparing themselves to be able to go back to work. 3 of the 7 are back, and we are now preparing all our manufacturing plants since yesterday up until at least Wednesday in order for us to be able to reinduct all our employees, to be able to make sure that they are able to observe these very strict risk-adjusted measures that we are putting in place across the entire value chain in order to be able to make sure that we reduce, as much as possible as we can, the risk of infection, particularly to be able to make sure that we're able to save the lives of our people, because we recognize the importance of prioritizing health more than anything else. And the fact that we are back at work, we're certainly going to be focusing on that in the next couple of days. And then we will obviously then start with operations as soon as possible so that we can be able to then start with a catch-up game to be able to make sure that at least May is not as hostile as April has been to all of us.
Yeah, as one would note then, as we take a look at some of these numbers then, 217 new vehicles sold to government. That makes up around 38% of the entire total as well then, Michael. The thing is here, though, is that at least with vehicles, you can postpone the purchase. So would you expect a big surge, particularly when the virus is over, when there's perhaps more security and surety in the market? Would you expect the numbers to perhaps spike a whole lot higher because consumers have perhaps delayed the decision to buy these big ticket items?
Well, we hope so. We really hope so. And look, it's obviously going to be a very difficult catch-up, particularly because the country, South Africa, currently is under recession. And we know that a lot of consumers are under a lot of pressure. And we see that obviously in all vehicle sales that we have currently. And we really hope that we will be able to catch up, possibly and be able to get the same levels as we have been, when we started the year in January.
Yeah. Michael, thank you so much for the time, though. Really appreciate it. Michael Mabasa is the CEO of the National Association of Automobile Manufacturers for South Africa. That's NAMSA. So an absolutely dire picture when it comes to new vehicle sales then for South Africa. And unfortunately, this is what it looks like. But many can say that this decision can and should perhaps then be one that is perhaps moved over. But the problem becomes sustaining the industry right now. We need to be able to do that. So has government reacted sufficiently when it comes to the COVID-19 pandemic, the economics of it all? Let's chat about that right after this.